Welcome to the new and improved National Vendor Contents Evaluation Report. This is our most thorough, intuitive contents package released to date. Here, we will give you a tab-by-tab tour, giving you all the tools and tips needed to complete your content settlement. The first tab of the report is the Claim Info tab. This will serve as your point of reference for carrier, insured, and your National Vendor Content Specialist information.
The next tab of the workbook is a brand new tab called the Coverage tab. The Coverage tab is your point of reference for deductible, deductible application, coverage type, policy limits, and any applicable sublimits. All fields will be completed by your National Vendor Content Specialist based on the information provided within your assignment. However, these fields are fully editable and is your source for editing any deductible application, deductible amount, or limits throughout the claim. Let's say we have a $500 deductible instead of a $250 deductible. We can simply go to the deductible field and change $250 to $500. You also have two buckets where the deductible can be applied: a primary bucket and a secondary bucket. In this example, we have the primary bucket being the cash payout and the secondary bucket for any remaining balance to be taken out of any replacements. Let's say instead of having the deductible applied to the cash payout, you would like to have the deductible absorbed in any overage. We can simply change cash payout to overage, with any remaining still being applied to any replacement items. The secondary bucket can also be edited if you would like any sort of balance to be taken out of the cash payouts or not applied at all. You can simply pick from the drop-down. As you can see, this claim has a $100,000 overall policy limit. The National Vendor Content Specialist has accounted for that in this field here. In cases in which the policy limit is not provided by the adjuster within the assignment, the National Vendor Content Specialist will simply leave this field blank, and no policy limit will be applied within the evaluation. However, if you would like to later input your policy limit for application, simply input the amount into this field here, and your policy limit will be applied. We will cover policy limit breakdowns in the Coverage Summary tab later on in the training video. The Coverage Type field is where your National Vendor Content Specialist will detail line item and aggregate limits. In this claim, we have a $500 line item limit for firearms with a $5,000 aggregate limit. These amounts are included in the policy limit. We additionally have a scheduled piece for $9,000, and as it's scheduled, it is exempt from the policy limit. Again, this field is fully editable, and if you would like to include these amounts in the policy limit, simply toggle yes to no. These fields too are completely editable. So let's say you would like to further apply a $5,000 collectible aggregate limit. You simply click within that field, input your amount, and your aggregate limit will be applied within the claim. The list of sublimits are standardized by National Vendor. However, they are also customizable per carrier. If your claims team has a list of standardized sublimits, please have your management contact us immediately.
The next sheet on our quote worksheet that we will be looking at is the Detailed Inventory tab. The Detailed Inventory tab is very similar to our previous one, with the exception that it has a few new functions and a few new columns. The first column you'll see, we've highlighted the new ones in blue. The first one you'll see is Room. This has a listing of rooms with regards to your claims. A very important one is Coverage. That is a new feature of our quote sheet. Coverage determines your limits. So previously, category was taking care of limits and depreciation. We have separated that out. So categories are now what determines the depreciation amount, whereas the coverage type is what determines your limits, both line item limits and aggregate limits. You'll also notice as we scroll that the totals are now locked on the top, making things much easier to see at a glance rather than having to scroll down to the bottom of an inventory. Here are some additional new columns. The item limit. So this is the item limit associated with this line item, which is dependent upon what coverage type that line item is. If there is any line item limit overages, that is populated here. This will be the post line item limit ACV. So now really this is the only number you need to look at with regards to your post line item limit ACV. This will tell you what the total of the product is when you consider ACV and a line item limit. This column tells you what the recoverable amount is. And this final column will tell you what the insured is responsible for to pay national vendor if the item were to be replaced. If it's an ACV policy and the insured is on the hook for the ACV, this is where that'll be stated. So let's look at one of the new features, which is our sorting capabilities. So what I'll do is turn this room into the bedroom. And by clicking on this arrow, you will see that you can sort both alphabetically and both by the room. So if I just want to see what is in the living room, then I can look at that. If I just want to see what is labeled coverage type jewelry, I can do that as well. You can also sort the value fields. So for example, if I wanted to sort my national vendor RCV column from largest to smallest, I can do that, or from smallest to largest. I can do that as well. That'll come in handy when I'm trying to basically spot everything over $1,000. So there's a number of sorting and filtering capabilities associated with this new detailed inventory. Right now I want to talk about the coverage column. The coverage column is populated with these coverage types that are associated with this worksheet. So if your carrier has a different list they would like us to include, we'll just need to know that. You can contact management here at National Vendor. We can have that customized for you. So this can be changed here. Coverage type again is what determines the limits, which is input on the coverage tab. So jewelry, for example, if I want to add a $5,000 line item to jewelry, this is where I would do that. Now back to our detailed inventory page, you will see that this item that is coverage type jewelry should have a $5,000 line item limit, and indeed it does. So that is where that's populated. Now what you'll notice here is that this ACV amount on this jewelry of $10,128.75 now runs up against a line item limit of $5,000, creating a line item limit overage of $5,128.75 and a post line item ACV amount of $5,000. You'll notice there's also no recoverable amount because the line item limit was reached with this item. Also worth touching on with regards to our new detailed inventory is some of the toggle features. So you will see under the tax applied column here, if you do not want tax applied, you can toggle that to no. Therefore, there is no sales tax anymore. Also, you'll notice that In this particular inventory, all items are set to no for NV replacement. Let me change one of those to yes. Pay special attention to the ACV amount and the recoverable amount. And when these get toggled to yes, you'll notice that the entire RCV amount becomes payable to National Vendor. I would now like to talk about the Coverage Summary tab. The first thing to note is that the coverage types are populated with all the possible coverage types associated with your particular carrier. I would also like to note that there are 3 color-coded columns. They represent 3 different buckets of payments. So with regards to this claim, this column is what you would owe National Vendor on items after line item limits are applied. The red column is what you would owe the insured as an ACV amount. The yellow column is what you owe the insured later, or the recoverable amount. And again, these 3 buckets are after line item limits applied. You will see that because this column, line item limits, is empty, there are no stated line item limits on either of these coverage types. So let's change that and see what happens to this page. We go to the coverage page. Now we'll put in a $5,000 line item limit for jewelry. You will see that now this is populated with $5,000. Your amount was reduced drastically from over $10,000 to now $5,000 because a line item limit was hit. You can see that back on the detailed inventory. Coverage type jewelry. You'll see a $10,128.75 RCV total with sales tax, which runs up against a line item limit of $5,000, creating a $5,128.75 overage and a post line item limit ACV amount of $5,000. No recoverable amount. So here are the totals of these 3 payment buckets after limits are applied. These amounts are now compared and run up against an aggregate limit. Since there are none populated, you will see these blank, and therefore these amounts just carry over. So these 3 buckets represent the same thing: what you owe National Vendor, what you owe the insured now, and what you owe the insured later, the recoverable amount, after the aggregate limits are applied. So when we add these 2, we get a total of $916.41. So I will go to the Coverage tab, and I will put an aggregate limit on contents of $500, and we will see how that looks on the coverage summary. So you will see, because there is no line item limit for contents, that those amounts are represented here: what you owe the insured now and what you owe the insured later. Because none of these items are toggled to yes for replacement, there is nothing owed to National Vendor. Now this amount again of $916.41 runs up against a $500 aggregate limit, and these are what your 3 payment buckets look like now. It takes from the recoverable amount first, then from the ACV amount. Lastly, it will take from the owed to National Vendor amount. Again, none is toggled to yes for replacement, so that's unaffected, but you will see that after the aggregate limits are applied to this $916.41 total, you now have a remaining amount of just that aggregate limit of $500. When I scroll down, these are the totals I see. So there is nothing owed to National Vendor, and there is $5,500 owed to the insured now, and nothing in recoverable. And these are the overages of the aggregate limits being applied. Now, after line item limits are considered and aggregate limits are considered, this worksheet will then consider the policy limit. The policy limit on this claim is $150,000, you can see here, and that's populated on the coverage tab right here. So on the coverage summary, you will see that the $5,500 is all subject to the policy limit. That is determined here. You will see that this is not exempt from the policy limit, neither is this. Therefore, the entire $5,500 is run up against a policy limit of $150,000. Therefore, that amount is unaffected, and your total will be $5,500. You don't owe National Vendor anything, and you owe the insured $5,500 now with zero recoverable. How is that reflected on the Payouts tab? The content summary up above shows that there's two items on this claim. There's a total RCV of $10,086.90. Sales tax was toggled yes on the detailed inventory, so you will see sales tax here of $958.26. You will see a less depreciation amount of $137.46, or a total depreciation amount. Your total line item limit overage was $5,128.75, and your aggregate limit overage was $416.45. Total of all overages was $5,545.16. Again, here's your three payment buckets broken down. National Vendor is owed nothing because nothing was toggled to yes. The cash payout to the insured is spelled out in detail here, with the deductible finally being taken on this line, for a total payout to the insured of $5,250. And again, you'll see nothing in recoverable exposure. Now let's look at this. The $250 deductible taken out of the ACV payment, or the cash payout to the insured, is reflected here. But there are plenty of overages to apply that deductible to, which some carriers choose to do. So back to the coverage page, and this is what determines how that is applied. So let's take the primary method of deductible application and change that to overages. The secondary application will be cash payout, and let's see how that looks on this Payouts tab. You will now see a sentence of instruction letting you know that the deductible of $250 will be applied to total overages of $55.45.16. Therefore, when you scroll down to the bucket of the insured payout breakdown, you will not see that deductible taken there anymore. Now let's look at a couple more scenarios. I'll go back to the coverage tab. I will eliminate the aggregate limit overages and the line item limit overages. And you will see that reflected on the coverage summary. Because there are no line item limit overages, these amounts on the detailed inventory just transfer to this page, and you'll see the three buckets. Those will run up against aggregate limits, of which there are none, so the amounts just transfer over. When you scroll down, you will see that those amounts are then run up against the policy limit, which again is $150,000, so it doesn't come into play. This creates a payment of $10,907.69 to the insured now, and $137.46 in recoverable. Let's look at the Payouts tab and see what that looks like. Again, nothing to National Vendor. And you will see that the deductible is taken from the cash payout to the insured. And that is because on the coverage tab, there were not enough overages to cover the deductible, as we know there are none, because there are no limits, and the remaining deductible to be applied to the secondary option below, which was cash payout. And that is why on the Payouts tab, you see the deductible applied to the cash payout. Now let's insert a policy limit that will affect these payouts. So back to the coverage page. Let's put in an $8,000 policy limit and see what that does on the coverage summary. So after line item limits are applied, you see nothing to National Vendor. You see a payment to the insured of $10,907.96. and a recoverable amount of $137.46. Runs up against the aggregate limits, of which there are none, so those amounts just transfer over, creating no aggregate overages either. Now these amounts must now run up against a policy limit of $8,000. You see that reflected over here now. And this is what it looks like. It wipes out this $137.46, takes the remainder from what is owed to the insured now, creating an overage of $2,907.69 and a payout to the insured now of $8,000. How does that look on the Payouts tab? Again, nothing owed to National Vendor. You will see that the deductible of $250 to be applied to total overages of $3,045.16. We do now have overages because they're policy overages, as you can see here. So we do not see the deductible taken here because we chose on the Coverage tab for the primary method of taking the deductible would be from the overages. Let's look at another scenario. Back to the coverage summary, we see that these are not exempt from the policy limit. Let's make this item exempt. Back to the Coverage tab, to the Jewelry coverage type, toggle that to yes. Now back to the coverage summary. You will see that this amount of $10,907.69 and this amount of $137.46 in the what you owe insured now bucket and the what you owe insured later bucket, or the recoverable amount, runs up against a policy limit of $8,000. But the amount subject to the policy limit, you will notice, is not this $10,907.69 amount. It is only a $778.94 amount. And that is because this $10,128.75 is exempt from the policy limit. It is marked yes. So that gets taken out when this is run up against a policy limit. And you will see that there is no policy overages. That is because the $8,000 policy limit is well over the $916.41 amount that is subject to the policy limits. So after we see that there are no overages, this amount that was exempt is added back in, creating payouts to the insured, nothing to National Vendor, $10,907.69 to the insured now, and a recoverable amount of $137.46, which should be reflected on the Payouts tab. $10,657.69 is the amount you owe the insured now, which is $250 less because the deductible needs to be taken from our secondary option, because there are no overages, which you can read here. Not enough overage to cover the deductible, so the remaining deductible to be applied to the secondary option of cash payout. And the $137.46 is still your recoverable, which is reflected there as well.
Next is the printable inventory. The printable inventory is your point of reference for a simple, printable line item report best provided to your insured. As with the detailed inventory, a great new feature of the printable inventory is the ability to filter and sort. For instance, before printing your inventory, if you wish to sort by coverage type, simply click the drop-down. You can sort from ascending or descending alphabetical order, or if you wish to filter any of the sublimits, simply uncheck the box. Please note this tab is simply a reflection of the detailed inventory line item report. Any edits or revisions should be made from the detailed inventory. Print margins have been preset to ensure a clean print, however they may need to be adjusted based off of your Excel settings. Next we have the Category Summary tab. This tab gives you a simple RCV depreciation, and ACV breakdown by category of product. Category codes are input by your National Vendor Content Specialist on the Detailed Inventory tab. Based on these codes, the Category Summary tab will aggregate item count, RCV, depreciation, and ACV for all items within that category code. Category codes are completely editable. Notice there are no antiques detailed on this claim. However, let's go back to the detailed inventory. Let's take this soccer ball. This wasn't just a normal soccer ball. This was a really old soccer ball. And because of that, we want to recategorize this from sporting good to antiques. We're simply going to go in, input the category code for antiques, and now if we go back to the category summary, we should see the RCV, depreciation, and ACV detailed out for that really old soccer ball. Totals are provided at the bottom of the tab for your viewing pleasure. Print margins are preset to ensure a clean print. However, they may need to be adjusted based on your Excel settings.
In this tutorial, we will take a look at the last two tabs on the National Vendor Quote Sheet, Reconciliation and Check Payments. These two tabs go hand in hand, helping with receipt reconciliation, deferred ACV payments, and we will start with the Reconciliation tab. You will notice that a lot of the columns in the Reconciliation tab have been carried over from the Detailed Inventory, including line item, quantity, replacement description, coverage type, the National Vendor Quote all the way through total RCV with sales tax, and most importantly, the recoverable depreciation with line limits applied that is still available to the insured, and the actual cash value with line limits applied that has been paid to the insured. The remaining columns are what will be used to determine what to pay the insured when they turn in receipts. Up at the top, you will see the running count of exposure to recoverable depreciation, and as we add receipts, that number will decrease. These two highlighted in yellow columns will also show what we've paid the insured as we add receipts, so these numbers will be going up as this number goes down. We finally have a box here that will help us keep track of any kind of limits and make sure that we don't pay over limits on certain categories of items. So let's get into receipt reconciliation by doing an example. The first thing I will point out is item number 1, which is a Samsung television. You will notice as we go across that this item has 0 quantity remaining and the status is complete. In this sample, this item was already replaced by National Vendor through our fulfillment program and approved by the adjuster. Therefore, when it comes to receipt reconciliation, it is not a consideration. No quantity is remaining and the status is complete. Any item that is replaced by National Vendor will have 0 quantity to be considered. But we move on to item number 2, which is 2 Samsung sound bars. And we're going to use an example as if the insured replaced just one of the 2. So starting in the light blue highlighted columns is where you're going to do your work to figure out exactly what to pay the insured. We start with quantity replaced, which in this case we're going to put 1. And then the next column is called actual replacement cost paid. And this is where you're going to take a look at the receipt, include any applicable sales tax and shipping, freight, whatever you determine to be the amount the insured paid for the item, and you'll enter it here. Let's say the insured paid $480 for this single soundbar. Immediately what will come up is the recoverable depreciation that would be owed to the insured based on the amount they paid. You'll notice in this case that the recoverable depreciation for 2 was $97.54, and that we are paying exactly half of that because the insured only paid 1 and paid more than the original quote. One of the great features of this reconciliation tab is the ability then to override. Let's say you want to pay the insured more, you feel that they, for whatever special circumstance, you want to pay them $50 or $60 or whatever they spent over the original quote. You can do that by simply putting the number you want to pay the insured. If it's 65, you put it right in there, and this is the column which is actually what you're going to pay to the insured. Now, in most cases, you're going to pay just right up to what you're supposed to pay based on the quote. So let's put $48.77 in for this example, as we'll match the maximum depreciation allowed. Let's add one more item. So in this group, let's say that the insured also sent in a receipt for this Milwaukee Sawzall. We'll say that they spent $169, and you'll notice that when the moment we enter 1 as a quantity, there's now 0 remaining. We'll put in the $169, and again, it's over the quote that National Vendor originally supplied, so the max recoverable depreciation is $34.96, which then moves into the recommended payout column. If you agree with that, you simply add $34.96 to the actual column, and you are ready to cut your first check. And as we noticed earlier on, or it was brought up, this number has gone down as we have start paying the insured, and this number is what we are paying the insured. We make our payments through the check payment tab, which we will look at now. Now, this check payment tab is where we're going to record all the checks we make to insureds for receipts. And it was a very handy tool when the insured turns in multiple receipts at multiple times. The very first check that we issue is going to be the easiest because you're going to know exactly what to pay based on what's right in here. $83.73 is to the insured. We record a check number, let's say 1001. You'll notice that when there is an outstanding balance, there's going to be an error message in red here, basically saying that the numbers are not in balance right now, but the moment you put the right number in the check column, this will disappear, and we now have a running total of checks paid. We've paid $83.73 on check 1001, and we are running in balance. So we will go back to the reconciliation tab, and I will show you two columns that are, in all honesty, optional, but are good for keeping organized. First is you can record the check number based on the item. So these two items that we just paid for, we'll record check number 1001. In this case, we can look at the fact that there are no more items ready to be replaced on this line. We replaced the only item, so we can change it from open to complete, and we know that this line is done. Now, remember, on this line, we replaced one of two, so we can change it from open to pending, which means that they can still turn in a receipt for that second soundbar. So let's fast forward a couple weeks. The insured turns in a couple more receipts. We go back to our inventory, we go back to our reconciliation tab, and let's take this Trek mountain bike, and let's say the insured has replaced this mountain bike for $499. We got a receipt. He went and picked it up. It was $499. Again, we'd use the same formatting. We will put quantity 1 replaced. We will put the whole $499 in there. And you'll notice, once again, the recommended payout to the insured is the full recoverable depreciation. If the insured happened to pay less than the full replacement cost national vendor quota, let's say they only paid $480 and national vendor had quoted $486, then the amount owed to the insured would be reduced to whatever would balance out with what the insured paid. In this case, let's say $18.13. So you would always need to make sure that you put something into the column that is actual paid to the insured, because that is what figures the amounts being paid. This is the recommendation. What's important is that you put in what you're going to pay the insured, and in most cases it should be the recommend payment. The other thing we want to look at in this second receipt, let's say the insured has now turned in a second receipt for a second soundbar because we owe them one more. How do we account for that? Well, the first thing is very easy. We're now going to make the quantity to replace 2. And this is where you're going to need to get your calculator out, because you're going to have to take the 480, the original receipt said, and add the second receipt. And we'll make this easy and say that the insured turned in a receipt for another $480. So those two combined become $960, and that's how much they paid for the two items. You'll notice there are now 0 quantity remaining, but the recommended payout to the insured matches the recoverable depreciation of $97.54, And so we're going to want to go ahead and change this to the 97.54 as well. And again, you'll notice that the recoverable amount of depreciation that is still available is going down. The payout to the insured is going up. So now we have these two items, the bike and the second item of the sound bars, and we want to cut another check. We'll go to our check payment tab, and you'll notice that again, we're now out of balance. There's this error message again. How do we figure out what to pay the insured based on the second set of receipts? It's a very simple process. We're going to use this column here by simply entering the current running total, which is down at the bottom, of all the checks paid previous. In that case, we paid $83.73 already. So if we enter $83.73, it will show that we owe the insured $66.90 on this second check. You enter that amount in here, and you'll notice the error is gone because we are back in balance. Let's say this is check 1002, and we are ready to close these two items out as well. We will go back to the reconciliation tab. And what we're going to do is take into account this second sound bar. We are going to move this to complete. And you'll notice what I did here is I have now entered check 1001 and put a slash and put check 1002. This allows us to know that we've entered two separate checks to cover the 97.54. We then go down to the Trek bike. We put in our check 1002. We will change this from open to complete, and we are done with this check. We have issued two checks to the insured in the amount of $150.63, and we have $77.23 remaining of recoverable depreciation.
This completes the tutorial on the National Vendor Contents Evaluation Report. Thank you very much for spending some time with us. Again, if you have any questions or if there's anything additional that we can help with, please don't hesitate to reach out to your content specialist. Have a great day.